Hey traders, welcome to Charts and Coffee. Great to see everyone. Happy Wednesday. Should be another interesting one. I want to show you all a couple things because I think it's very important to sort of keep our bearings with, why this might be a little bit more frustrating an environment, or more specifically, right? Rather than just saying it's frustrating, right? I mean, I think most of us would agree follow through has been difficult to come by. But why has it been, and where will that change, right? Let's get tactical about it. If you take a look at the S&P, take a look at the last 1, 2, 3, 4, 5, 6, 7, 8 candles. So really, since the 5th, since that rally on the 5th, since we saw that Friday close very, very high, we haven't sold off significantly. We're definitely levitating up near the highs of this range. But if you take a look, right, if you take a look at what's happening with the ranges, we are still stuck inside the range of May 10. We had a high at 41.73 and a quarter and a low at 41.12 and a quarter. And we are still stuck there, right? That is where we are sitting. And until we can break, so then the question is, well, have we gone anywhere new? Not really, not really. Even this low on the 12th only managed to get down to 41.11 and three quarters, right? So yeah, maybe a smidge lower, but again, no follow through. So when you're wondering what the heck is going on and why is this so frustrating? Well, one, we're stuck in a range. Quite literally, is the S&P stuck in a range. How do we manage this? All right, we manage this by shortening the time frame. By shortening the time frame, we're able to get our setup, our entry, and our follow through, either to our stop loss or target, quicker, right? We're able to get in and out with a shorter time frame. How short? Day trade on a 5, maybe short-term swing trade on a 1-hour chart, maybe a 30-minute chart. Okay. How do we know when we've escaped this range? Keep an eye on that Wednesday, May 10 high-low. And that's it. So as long as I'm stuck within that Wednesday range, and if you want, I'm going to do this here. I'm going to grab the little rectangle drawing tool. I'm just going to do this, right? As long as I'm stuck in that, I know that I've got an issue, right? And if you want to go ahead and put just a horizontal line across the top and bottom, what have you, that's it, right? And I don't know there's much else really to say other than we have just about every Fed member speaking this week. I mean, all of them, sometimes multiple times. They just won't shut up. We have Powell coming up this week. So the FOMC the meter is just absolutely pinned this week. Today, I believe we have a bit of a reprieve. So let's jump on over to our economic calendar. We had building permits earlier this morning already. Moving on, we've got our EIA crude oil inventories coming out at 10:30, and that's about it for scheduled economic events. We've got no FOMC, although it picks right up again tomorrow. All right, so that is where we are. As always, if you have any questions, type them on in. First come, first serve. Let's take a quick look at the dollar and the bond market, and then we'll jump into your questions. All right, bond market. Now, we are looking at a long position in bonds in the Sector Secrets Mastery Room, neutral environment, daily price movement range, volatility-based support. So that's going on right now. So I'm a little bit, look, the moment we have an open trade, we have to acknowledge we're going to have some bias. I don't know anybody who operates with an open trade, money on the line, even dare we say ego on the line. Of course it happens. We're going to have a little bit of bias. So before the entry, we're probably a little bit more neutral. After the entry, we're definitely biased. A little bit. Euro, I would love to be a buyer of the euro, waiting for an opportunity. And if for whatever reason we can get down to the 108 handle, I would love to get long euro. This does not mean that US dollar is necessarily going to continue higher, but as long for a prolonged period of time. But as long as the euro is weak, the US dollar is going to be strong. All right. So with all that being said, let's go ahead and jump into the questions. All right. We've got, good morning, gang. Good to see everybody. All right, Jack. Will I share my thoughts on the 6E moving lower and the DXY moving higher, and yet the NASDAQ is at yearly highs? All right, so great question. Let's take 2 out of 3 of those symbols, Jack. Um, Euro and US dollar have a 90+%. I think it's 96 or 97% positive or sympathetic, negative or inverse correlation, meaning if the euro goes up, darn near tick for tick, the US dollar is going to go down, right? They have an inverse or opposite reaction to each other. However, I will say in my analysis, I don't really care. I don't believe, let me put it this way, I don't really care what the dollar is doing when it comes to stocks as a primary consideration. All right, hold on, Rog. What do you mean? If dollar is strong, isn't that negative to equities? Not necessarily. Not necessarily. So if I'm trying to understand what the dollar is doing, let's pull up the dollar, shall we? Let's do this. Let's pull up the DX futures. And that's the best way to look at the dollar index basket, which is 58% euro. Here's the image of the US dollar. Is this really a strong dollar? So even before I get to what I personally view the dollar as, let's just agree upon the dollar's in the bearish hemisphere. It's below the 200 exponential, and it's barely staged about a 6 or 7 day rally within the context of an overall down market. So I would not call this a dollar strength move that should be in any way indicative of prolonged dollar strength. Then, in addition to that, do I believe that the US dollar is necessarily what would prevent the equity markets from going higher? No, I really don't. A weak dollar is great. I mean, there's no doubt a weak dollar is better for international corporations to do business. It's certainly not going to hurt, but I don't think the US dollar strength that we've seen so far matters. So I hope that makes sense. Number one, my primary consideration for what's driving equities higher or lower is really more monetary policy. Is a US dollar going to move because of monetary policy? Of course, right? But I don't believe that the strong US dollar necessarily undoes the possibility of strong equities. It is certainly better if it's weak, for sure. And then kind of putting a bow on it, the current rally in the dollar is not enough for me to say, hey, this is a dollar that's just roaring higher, right? When you step back and look at it. So I hope that makes sense. So Jack, I'm going to look at each piece individually and really ask myself if one has anything more than a correlation to the other. Causation is different. The euro and the dollar have causation, right? The NASDAQ would be further down the line, would not be a primary consideration. So I hope that makes sense, Jack. Hey there, Stacy. How are you? Now, I appreciate that. Absolutely. Thank you, Stacy. I'll see you in the Sector Secrets room in just a bit. All right. Thoughts on win for a trade? We had this question last week, this last session that we did in the Sector Secrets Mastery, where we go over weekly timeframes and a longer term portfolio, our weekly portfolio session. It looks very interesting on the weekly chart. RD, I can't say that it's wowing me on the daily quite yet. And look, if this were an uptrend, I'd be fine with looking at a surf the wave, but it's not an uptrend any longer. The weekly could be interesting, and I believe that's where most of the interest in the Sector Secrets room landed. Keep an eye on that 200 on the weekly if you're interested in a longer term exposure trade. Thanks for the question, RD. Next up, if I expect to move in the next 10 days, how far out do I need to be on the option? Well, at least the 10 days, right? Remember that as we get inside 14 days, the time decay, the theta decay increases on an option. Warren, the best way to offset that is to either be in the money, but that's not going to fix it alone. And also to have momentum in the direction of your put or call. So you're going to have some momentum, some volatility in that favors the direction of the option that you hold. Unless, of course, well, it would still favor if you sold an option, right? So if you're going to write an option and it's 10 days to expiration, you're not going to collect as much unless we have a high volatility environment in which you're writing the option. So I would say that it just depends on the trend And what you're going to be leaning on a lot to offset the time decay is the part of premium value that increases because you're actually directionally right. And this idea that there's directionless options trading is categorically a very bad assumption to make. And I know that's not your question at all, Warren, but just generally speaking, even no direction is a direction, gang. So folks out there who think, well, I'll just play a directionless option and it will do well no matter what the market does. Wrong. No. So as if, right? Think about that for a moment. No matter where we are in our trading or investing life, the way we make money, aside from dividends, and even then, if you're making dividends but the value of your stock is moving lower, are you really making money? So part of, and we just need to accept this because there's way too much conversation about neutral strategies. A neutral strategy does not mean we don't have to be directionally correct. So I think that's another part of that, Warren, which is if you've got very little time to expiration and your option, this depreciating asset, is literally rotting, right? You've got to be directionally correct to offset that premium loss, okay? Or that premium decay, if you will. All right, next up, cool question. Next up is Stanley, Walmart. Sure. Not in an uptrend. I'd be, oh, that's the weekly. Hang on, let's go back to the daily. It isn't an uptrend. That's what I thought. I would like to set up a buy on, yeah, actually, I would like to set up a buy potentially on Walmart. And how would we do this? Well, if we're looking at the daily time frame, let's do that here. If we're looking at the daily, let's do this. Bear with me here. So what I want to do is I want to bring up my, there we go, my tops layout, put the daily time frame on and type in Walmart. All right, there we go, Raghee. And are we in an uptrend? Let's move this over. You know, this is actually looking quite interesting the closer we get to the support, the automated support of the Darvis right around 149.5. This could be an interesting setup. Yeah, I would keep an eye on it. It would be long only for me. We're going to see a little bit of weakness after, well, actually, we actually rallied after ex-dividend date, which is interesting. I'd keep an eye on XLP, Stanley, but I like this as a buy. I can't short it, not on the daily anyway. So I do like this as a buy. I do like this as a buy. And then with the daily price movement range, the daily price movement range actually does not like this until about 148.5. So the wave we're inside of, if you're looking for something that's price and volatility, we might have to wait for a Darvis plus DPMR. So it depends on whether you want to focus on volatility entry or price entry, or maybe treat the price entry at the wave aggressive. The volatility entry is more moderate to conservative, but it is long only. How much do I think caution in view of ongoing debt ceiling talks is playing a role with commodities like CL and GC? Hey there, Matt. Yeah, we're inundated with the fear mongering around the debt ceiling, gang. The debt ceiling conversation, and I'm really not trying to make too much of it, but I don't want to ignore it either. But this is not the first time any of us have had to trade through a debt ceiling. And yes, I'm going to use the probability of the last 70 plus times we've been up against one. We didn't default, right? I'm not going to presume we're going to default this time. Now, remember what news, what is the role of news? What is the job that news has? To keep our attention. What's the best way to keep our attention? Freak us out, right? Are there things that are happening in the broader averages that are beyond the debt ceiling? Of course. Is the debt ceiling one of those umbrella type events that if it were to happen, and I talk about the debt ceiling some in yesterday's video. So it's definitely on my mind. Don't get me wrong, but it's not guiding what I'm doing with a short-term swing trading or even day trading approach. So being concerned about it, Matt, means let's just shorten our time frame and not commit to longer term follow through, right? Because of this debt ceiling looming May 26, June 1. I've even heard this sort of X date. At the end of this month and the beginning of next, yes, things are going to get really real. In the meanwhile, would gold and crude? I guess my answer to that would succinctly be no, because why would it only be gold and crude that are concerned about the debt ceiling. Why not the S&P? Why not bonds? Why not other places that are typically, if we're that freaked out right now in terms of where we need to be, I would expect utilities and staples, and gold and bonds to rally, right? Where are those places that when we are collectively nervous about some event that could be cataclysmic, as this one could be, where would we hide out? We're not hiding out in any of those places. Isn't that interesting? Utilities are melting down. Staples are lower. Why aren't bond yields moving lower? In other words, why aren't bonds moving significantly higher? Dollar can sometimes be a place that traders hide out. We can say the dollar's up, but not in a massive way. So all the things that I would expect if we collectively are freaking out, I wouldn't presume that the Nasdaq should be punching up to higher highs. I wouldn't presume that the S&P would be supported. So I think there's something else going on there, Matt. Great question. I just think there's something else going on there because it should not be isolated to those two commodities, right? Crude oil really playing a game of supply and demand. And by the way, the EIA, the IEA have said maybe second half of the year demand will pick up. But until we really start to see evidence of that, there just is a slowing demand for crude. Even though there are production cuts, obviously that OPEC hasn't reached that balance. Gold is a play on real yields. Let me show you what that looks like. That's the nominal yield of a bond minus the rate of inflation. If you think, Rog, I don't know what the heck that even means. No worries. You can chart it. If you can chart it, I'll be frank. You probably don't really need to know a whole heck of a lot of what it is. You just need to know that as long as real interest rates are moving higher, gold could be under a little bit of pressure. If real interest rates are moving sideways, which they seem to be, gold is also probably going to move sideways. So what you've got here, let me lighten this up. In the red, you can see here, that's your rate of inflation, the nominal yield of the bond. In this case, I believe it's a 1 year on this particular chart is in black. And then the real interest rate, which is what I'm looking at, is in blue. That blue line moves opposite to gold. And look how it's not really going anywhere. And that's where, I don't have a narrative around gold around what I believe impacts it the most, which is real interest rates. So I don't know that the debt ceiling is necessarily what's kind of keeping things in check. That makes sense. I try not to give you a because I said so type answer. I want to show you all the data that I'm looking at. And that's what I'm looking at there, Matt. All right. Time for a few more questions. Next up, Stephen asks, Raghee, I was wondering if you're going to have a Sector Secrets webinar coming up to go over what I am doing in the room. Stephen, I don't know. I'm definitely not in charge of whatever our calendar is, but if you ever want to know what I'm doing in the room, if you have questions generally, you can ask here in Charts and Coffee. You can ask in This Week in the Markets. I can tell you what we do on a regular basis, week in and week out, and probably the best way for me to show you that would be simply to bring up our schedule, because that's when I'm in the room with you all, and that's going to reflect what we're doing most. So this is our schedule, week in and week out. And then on top of this, we have a few other things. You get the daily, most of you know I take copious notes. If you've never been in the room with me before, you get my daily notes. So what are the setups? What are the things that I'm noting about the market? So you've got the Raghee notes, as I call them. And you also have now This Week in the Market. So those are also things that are, as well as a number of indicators that I make available to Sector Secrets Mastery members only. So that's what I'm doing in the room. We day trade every single morning for about an hour. We do about another 20, 30, 40 minutes of swing trading setups. We look at our longer term portfolios once a week in the macro. Fridays, we have an Ask Me Anything. Mondays, we have a tech session. It's a very active room. We've got anywhere from 200 to 300 members in there all the time, focusing on the markets, right? And it's a fantastic community. And that's your Sector Secrets. I do not know, though, my friend, when that's going to be again. But I'll tell you if and when it gets on the calendar. All right. Trader Momo asks, do I expect a hot zone volatility event for tomorrow for the unemployment announcement? Yeah, the 8:30, I don't think it's a massive one, Trader Momo. Is it a tradable one? Yes, it's not usually extremely volatile. But then if you look at what else is on the calendar, and let's do that here really quickly as we wrap up. If you're looking at what else is on the calendar for tomorrow, scroll on down to Thursday. There's your initial jobless claims, Philly Fed, and then we move on to Jefferson, Barr, Logan, right? I mean, we have a lot going on. And then Thursday, the market's already going to be looking ahead to Williams, Bowman, and then some guy named Powell, right? So we have a lot coming up as we get past Wednesday. So Wednesday seems to be a little bit of a break of the FOMC and there's the inundation of data, but we go right back into it. So, yeah, jobless claims could move the market, but then not even 35 minutes later, we've got Jefferson. 25 minutes later, second day of Barr testimony. Then we've got Logan. Then we have existing home sales. So there's a lot that is yeah, sure, that's going to be one of them. But Trader Momo, I'd say it might be the least of the hot zones tomorrow. All right. All right, gang. As always, thank you so much for being a part of Charts and Coffee, Caffeinate, and Dominate. Gang, heads up on the economic calendar. Still a wild one the rest of the week. I'll see you tomorrow. Same time, same station. My sector secrets, folks, I'll be in that room in just about 20 seconds.